tariffs and that type of talk are all very supportive. I think if he were to stop going after Canada, stop going after Mexico, stop going after Europe, and obviously China, the big.
We knew it was coming. Gold at all-time highs, and it was all because of this gentleman, John Feneck, CEO of Feneck Consulting, here to take his victory lap. John, last time the market was going higher, gold was going higher, but now it's just gold. What did you do to the market, John? What happened?
You're too kind. Nice to be back. Gold is catching a bid since our last recording, which was pre-inauguration, I believe, because Trump has been following through on his talk, right? Which a lot of people weren't really convinced about, I think, in November, December. They thought the tariffs were a bluff and a scare tactic, if you will. And clearly that is not the case. Another tariff just levied within 24 hours here on the auto industry, and it's just nonstop news. And the market has sold off a bit, meaning the broad market, because no one likes uncertainty if you're buying tech and high beta stocks, right? And we're in an uncertain time, Voz. This is like the best backdrop for gold I've ever seen, ever. So I think it's just going to get better from here. If you look at what happened with Bank of America just today, I used to work at BOA Merrill at the executive level, and I can tell you it's a pretty conservative shop when I worked there. They just upped their gold target for 2026 from around 26.25 an ounce to 33.50 an ounce, which is a very large number and a huge percentage increase, obviously. This just following UBS, another huge shop, going at 3,200 by year end. So you're seeing a lot of bigger names now get on board with the gold narrative, which is exciting.
That it is, John. I mean, we already are blowing past targets that you gave us since we last spoke, and we're going to get to future targets and future opportunities. But you mentioned tariffs. So you're looking at gold as a safe haven, and as long as we hear the T word, gold will go higher, or are there other factors?
Well, there's a lot of things that could work in gold's favor, which has not been the case in previous rallies. Tariffs and that type of talk are all very supportive. I think if he were to stop going after Canada, stop going after Mexico, stop going after Europe, and obviously China, the big boy that I think we're just getting started with, then gold would take a hit. I mean, it would be normal to see a correction down to even something like 2,700 to 2,800 on that kind of a narrative. I just don't see that happening. I mean, Trump hasn't indicated at all that he's letting up. I think he means business, and the world is starting to get the memo on that. And so that's supportive of gold. Central bank buying is supportive of gold. The uncertainty that we have with just something like Israel coming back online is uncertainty. The fact that Trump said, hey, I want to address this Russia situation first week in office, and here we are, nothing has really changed, right? I mean, yes, there's been some stuff with back and forth with Zelensky and such, but we're not at a resolution today. We're at a resolution maybe hopefully this year, but that isn't off the table either. There's just a lot of things that you could look at if you're bullish gold and say the backdrop here looks amazing.
John, you mentioned that support is around 2,700. Should those things, happen, how about an updated target? Where do you see gold going next?
Sure. I mean, I've been saying, since we last met, Voz, probably 3,200 was sort of my, by mid-year kind of target. And that's starting to shape up here at 3040-ish, right? I think, you've got a real shot this year at 3,200 by mid-year. And summer's always tough to analyze, right? July, August, especially if you're in a bull market, people go on vacations. There's not a lot of things going on. But September, October, that is also a very good time for gold. Why? Because going back to the Great Recession of 1929, September and October are the two worst months for equities. And you're seeing this divergence right now between just general equities, something like the Dow or the NASDAQ, let's say, the S&P, and something like gold. So I think the backdrop, again, just looks amazing. And people need to get some access to gold and silver and precious metal stocks. And a lot of people are extremely underweight, to say the least.
John, I wanted to get you on here to take your victory lap in the price action in gold. However, you have another round around the track, because you were also discussing some individual gold related names. One at the top of my head was Newmont Gold, NEM. I kept a track of that one, and it's been up at least around 10 points since we last spoke. Do you have an update on NEM and any other equities that you like in this sector?
Yeah, sure. That's great. This might be a mouthful, so bear with me. Newmont is the largest holding in GDX. GDX is the largest ETF in the mining industry, over 15 billion in assets. So, of course, if you believe in mining, you want to own both of those things. You have some overlap because Newmont is a holding in GDX. But Newmont, since we last recorded, had earnings, and they weren't as bad as people think. Their costs are still high. It's about $1,600 an ounce. But at 3,000 plus gold as a producer, you're still making hand over fist free cash flow. And that's what we talked about last time, right? So I think we recorded around 37, 38 bucks was low 37s, I believe. Now we're trading in the high 47s. It's easy to see a path to 55 or 60 in the next couple of months. As people get on board with the gold narrative. I think gold stocks have really been left behind in a broad market rally, and this is like inning 2 or 3 of 9, right? This is not even close to being over. And so what you do is, if you believe in that, you buy dips, right? You see something like Newmont go to 50 and it pulls back to 45, you buy a little more at 45. It goes back to 52 and pulls back to 47, you buy at 47. Like, you have to buy on the way up. We don't get it right on the buy side, Voz, on our first entry point, hardly ever. We are just very persistent. We buy 6 to 10 times on the way up. That way we get a blended experience, what we call it a cost basis, that's going to be very attractive. And our cost basis on Newmont's, it's under 40 bucks. Moving on to some other things, I would say that, smaller cap stocks are where you can make outsized returns in a market like this. One that comes to mind is Luca Mining, that I just met with 2 weeks ago at a dinner. The symbol is LUCMF in the States, LUCA in Canada. They have 2 projects, both in Mexico, both producing, both are permitted. What I've been impressed with is their balance sheet that they've been working on here for months now. I had dinner with the CEO, and he said they could probably extinguish all of their debt by summertime, which I think most analysts are looking at like end of year. So obviously investors love to see companies that are debt free and love to see them paying that off earlier than expected. But what I think the market's really missing with this one is the revenue potential. In terms of, like, their last couple quarters have been okay. They had to do a capital raise back in September of 2024, so that hurt the stock. But now, in a higher gold price market, they're going to be producing a lot more free cash flow than I think the market thinks. So we call that a re-rating, right? When a company does well, but the market's kind of thinking they'll do average, well, then analysts have to get on board with that and upgrade the stock, which is what I think would happen with that one. Another one that we have been involved with outside of gold is tungsten. We love that metal. It's a military metal, so it's heavily used in body armor, ammunition, missiles, etc. The problem with it is it's in very short supply. If you look at what's happened since we recorded back in January, February 4th, China's first rebuttal to the U.S. on the tariff side was to name 5 critical minerals that they were going to put tariffs on. And guess what? Tungsten was one of the 5. China produced 80% of the world's tungsten last year. When you look at who else produces tungsten, it's Russia and some other names that are not really friendly parties to the U.S. So 91% of tungsten last year was produced in countries that are not the US. And guess how much we produced? Zero. So we like two names in the tungsten space that we think are going to continue to do well because they're both US based. And if you saw with Trump's executive order last week, he's talking about, hey, I need to get a better handle on critical minerals in the U.S. that I want on my desk within the next 10 days, which would mean next week. And two of those names would be American Tungsten, great name. That ticker is DEMRF. Stock's trading at about 70 cents right now as we record this. The Canadian ticker is TUNG. They basically are a past producing tungsten mine in Idaho that we think is going to, put their hat in the ring for some DoD money here sometime this year. Another one, lastly, is Guardian Metal Resources. That one is GMTLF in the States. They don't have a Canadian counterpart. GMTLF is one of our larger holdings in full disclosure. The reason is I met the CEO just about a year and a half, 2 years ago. Young guy, like 33 years old, 34, very sharp, wants to get it done in the U.S. He's got two deposits in Nevada, and they, again, think that they're going to get DoD grant money. And how is that significant, Voz? I guess we should close with that is if you're a shareholder of little companies, they always need capital. And if they're getting capital by raising money through the public, they're going to dilute us as shareholders that are, in the stock now. So when you get a check handed to you by the government for $5, $6, $7 million bucks, and you're a small little company, that money is what we call a grant. It's not something that has to be paid back, and it's not dilutive to shareholders. So I think you'll see a lot more of those checks being given to small companies as we advance through 2025.
Yeah, John, these charts are ripe to break out, but we get a lot of questions about opportunities in physical gold. Are there any new opportunities there?
Yeah, absolutely. When you look at our portfolio as of February 28th, we have about 1.5% in physical gold, and we have about 7.8% in physical silver. So it is a large portion of our portfolio, and it's going to greatly contribute to our performance in Q1 here. I think that people need to own physical. I've always said that. The challenge as a small investor is sometimes you can't afford gold, right? And a lot of people, for that reason, will gravitate towards silver. The issue with silver, however, is supply. Like silver coins are very hard to find at $30 plus silver. They leave stores real quick. So what I've done is I've aligned with a company called Neptune. They do a great job of being very transparent about their relationship. They've been doing it over 20 years. They have backing from financial institutions that I like and know, like Franklin Templeton, and they have inventory, right? So it's not one of those situations where you have a huge six-figure minimum to work with them. You can buy, a few $1,000 worth of product if you really wanted to and dip your toe in the water, which I think is important, because there's a lot of small investors that want access but don't know where to turn.
John, you mentioned silver. Any update on silver's price action?
Silver is the most frustrating metal. I think I said that when we first met last year. Silver is still trying to find its footing, I think, at around $34, I guess, right now as we record this. So silver is going to break 35 this year, as we've said many times. It's going to break 37, I think, as well. And then you test 40. 40 is not major resistance in my mind, because if you look at charts, back in the 1980s and again in 2011, 2012, when we had those breakouts to $50 silver, those only two times it's ever happened, you don't see a lot of resistance between 37 and 50. It's just kind of a straight line up. And I think in this kind of environment, we're in a better backdrop than we were in the 80s, as well as in 2011, 2012. So I'm a huge silver fan. I will say, though, that it is one of those metals that's very frustrating for investors. People think it should be priced much higher. I agree. But just follow the tape, right? The tape is telling you that silver's in an uptrend. It's holding $30 very, very nicely. If you recall, Voz, $30 an ounce was major resistance for 11 years until recently. So, I think the breakout is just getting started there, and we will see $50 probably by next year.
John, it's always wonderful to have you. Your targets have been spot on, and I'm excited for our next update.
Thanks, Voz. Appreciate you having me back on.
Thank you, John. You hear that, Warren Buffett? I know you're in cash and you know where to put it. Thanks for watching the Alternative Edge Report. I'm your host, Olivia Voz, and make sure to like and subscribe so you don't miss fine guests like John Feneck and great stock picks. Bye, everyone.